India has released the minutes of the Monetary Policy Committee meeting that was held between 2nd and 4th of December. And remember, in that meeting, the MPC had unanimously voted to keep the rates unchanged and also to maintain accommodative stance for as long as required, even going into the next year. So taking a look at what the Monetary Policy Committee members are saying, firstly, of course, RBI Governor Shaktikanta, he has said that inflationary pressures have continued unabated and these pressures are posing challenges for monetary policy. He has said that the investment demand in the economy is yet to gain traction and persistence of inflation at elevated level is constraining monetary policy at this point. He's also spoken about the need to continuously nurture and support growth to make it more broad-based and durable. This is a sentiment that has been voiced by most of the Monetary Policy Committee members. They have said that policy support is needed to sustain growth until growth can be self-sustainable, and this is something that all the members have spoken about. Shaktikanta Das also said that the situation needs to be monitored carefully, both on the side of growth as well as inflation. So this is a warning coming in from Shaktikanta Das that the situation overall needs to be monitored carefully. Talking about what Shashanka Bide has said in the minutes of the meeting, he has raised concerns on the status of certain subsectors and aspects of the economy because he said that there are no clear indications on how micro and informal sector enterprises have fared during the phase of recovery. So it is important to know whether they are faring well as well. He said that improvement in demand is clearly needed to accelerate production and that recovery in economic activities does require support from consumer spending right now. And government spending is also needed to support investment and consumption going forward. Dr. Ashima Goyal has said that the turnaround needs policy support until it's well established, something, as I said, as most members have voiced. And the MPC's accommodative stance will ensure durable liquidity will be in surplus, and that accommodative stance will also ensure that short-term rates will not rise above the reverse repo rate. Professor Jayant Verma has again disagreed with the word decided in the forward guidance, and he has said that he chooses not to dissent this time, but he does disagree with the use of the word decided, as he had done last time as well. But he said that the balance of risk and reward are still in favor of monetary accommodation. He said that a sustained failure to defend policy corridor could prove expensive. Looking at what exactly he said that rising profits and profit margins, improving capacity utilization and lack of new capacity additions create ripe conditions for oligopolistic core to start exercising pricing power. He said that there are also other enterprises that are benefiting from borrowing at rates below the policy corridor through commercial paper issuance. So he is saying that I fear, therefore, that a sustained failure to defend the policy corridor could prove expensive in terms of creating inflationary pressures and inflationary expectations. So far, low rates have been feeding into asset markets rather than goods price inflation. Taking a look at what Dr. Mridul K. Sagar has spoken about, he said that the monetary policy is now entering into a more complex zone. He's saying that the growth will stay below trend for the rest of the year. So this is another warning coming in. And the strength of the monetary policy now depends on how inflation evolves. So how the monetary policy, how much the monetary policy can continue to support growth will depend on how inflation evolves. Lastly, Dr. Michael Patra has said that elevated inflation has checked in and it might be here to stay. He's saying that the importance given by the MPC to growth above inflation is yielding dividends and that economic activity is recovering but hesitantly and unevenly, and which is why we must continue policy support till economic activity is set on a firm trajectory of self-sustenance. So these are the key comments coming in from the Monetary Policy Committee members in the meeting that was held from 2nd to 4th of December.